Mindset for Mastery. And I'm going to hand it over to Ryan to take it away. I'll drop off, but enjoy the panel.
Thank you, Jessa, and thank you everybody for joining us. We're gonna have some fun. We're gonna talk some money. We're gonna talk finances, SBA, all of that, and we have an all-star panel for you that is really gonna bring you some great information that you can use far, far beyond. And so what I'm going to do is I'm gonna ask everybody to start with a short, quick bio of themselves and also one personal finance thing that they're doing right now. Let's start with you, Joanna Kanakis.
Sure. Hi, everybody. Thanks for joining us. I'm Joanna Kanakis. I'm a Director of Enterprise Sales at Halo Investing. We are a financial technology startup looking to democratize protective investing. So I spent my career on Wall Street on the trade desks, trading through 2008 crisis, and now in the disruptor role, watching the next crisis unfold.
And what's one of your personal finance pieces that you're doing?
Thank you. Well, quite frankly, I'm biased in that. I would say you want to look for some sort of level of downside protection. So a lot of us are moving towards more passive investing, holding ETFs and that kind of thing. We at Halo certainly believe that you should have a level of downside protection in your portfolio, so you're not sweating as you're reading the headlines. But there are certainly plenty of tools and products that are available in the structured world that can help you do that.
Yeah, and I'm big on financial literacy because 78% of NFL players 2 years after they're done are bankrupt and either chemically dependent or divorced, or all three just 2 years after they're done playing. So we want to make sure we're talking about the personal side too. And let's continue with a personal friend of mine, Chris Schwalbach. Chris, tell us who you are and what you're doing in your personal finances in this time of the Corona.
Thank you. And thanks for everyone for being here. So I think, I started AVL Growth Partners about 10 years ago. AVL is a CFO firm. So we work with a lot of startups, early stage and growth stage companies, and we serve as their finance and accounting department and help them really achieve the next level of their growth as they're kind of like finding their way. So we work with over 150 companies right now, just like helping navigate. On the personal side, you know, I think what I'm trying to do is I'm trying to spend my time teaching my kids about money right now. I've got 3 young kids, and I think it's as this shape, you know, this curve or whatever you want to say changes, and they start to see what's going on, and they're hearing the news so much. So I think it's a really interesting learning time for them. I'm just trying to take that opportunity. So just trying to pass it down and not and create some goodness in the next generation here with respect to money too.
Well, hey, we need it. So thank you. And now the worldwide rock star, Jonathan Ellis. Tell us who you are, what you're doing, and what you're doing with your money right now.
Hey everyone, pleasure to be here. So my name's Jonathan Ellis. I run Sandalphon Capital. We're a venture capital firm based here in Chicago, focused primarily on the Midwest, do pre-seed to Series A investing. Founded Sandalphon 4 years ago, and prior to that, spent about 10 years doing middle market private equity and debt investing at a firm called Macquarie. I also invested in a couple of small businesses, and on the side, I'm on the board of a group called Social Venture Partners, which is a group of engaged volunteers that help scale nonprofits in the Chicagoland area. Sorry, go on.
No, I'm sorry. Go ahead.
And so my one sort of financial tip right now, I'm staying in cash. I think a lot of people are trying to pile into the market. They think this is going to be over soon. The stock market is not the economy, and a lot of unnatural things are happening right now. So I may miss the rally of a lifetime, but I'm a little bit cautious.
Hey, I'm with you there. And I like what you said. The stock market's not the economy. I think it's easy to get in there. But let's dig into some of the things that companies are going to be facing now that everybody knows your expertise. And Joanna, I want to start with you because you have been named a culture and conduct champion. What does a culture and conduct champion look like right now in this business unusual space that companies find themselves in?
It's certainly unique, I think, from even what we were kind of doing back in when I received that award in my days at Societe Generale, which is a Wall Street bank. In this day and age, it's really taking care of your employees, right? It's being cognizant that there are humans on the other side of this, that there might be kids running in and screaming in the midst of this panel, and kind of knowing that part of this business unusual culture is embracing your whole self and bringing your whole self to work.
Now, are leaders transparent then? Are they transparent about the finances of the company? Or are they transparent about the future of how they see the company shaping and going forward?
I certainly think so. I mean, it's really our role as the leaders of the firm to talk about the hard and the good that's happening within this environment. My company is super lucky that we're one of the few firms that's doing really well considering this environment, because we're in the business of selling downside protection to advisors. But yeah, I mean, insofar as you're looking to change what your burn rate is or shift your strategy, I think this is a crucial time for leaders at firms to be candid with their employees and to be frank about the reality that we're facing and be brave in facing those tough decisions.
And Jonathan, Joanna talked about the burn rate. I mean, you're a VC. A lot of your clients are going to be, that's got to be a major conversation. What are you telling them to cut that burn rate right now in this business unusual time?
Yeah, sure. No, look, it's a mixed bag. Some startups, their technology that's going to enable people to actually keep operating in these times, and some are seeing actual tailwinds. And so in those cases, they're actually looking to raise opportunistically now to really lean in and scale up and help with onboarding and really help solve some problems. Unfortunately, there are others where revenue has gone to zero overnight, the ones that didn't have really sort of locked in sticky revenue. And so everyone's having to handle it differently. Everyone's been looking into the various types of government-backed funding options right now. But the reality is, across the board, I think we're seeing certainly furloughing, if not layoffs. Large tech companies down to small, people are having to cut back anything from 10 to 50% of headcount, I'd say right now. And that's obviously, tough right now. It's, I think, a little destigmatized. These are unprecedented times where, these actions need to be taken. And hopefully that'll enable the company to survive and be there on the other side of this. And in the meantime, people can collect the improved unemployment benefits. And then some people are looking into doing things with their leases. That's obviously another major expense. So talking to the landlord, trying to work something out. Everything else is somewhat discretionary, right? So you can cut back on your sales and marketing spend. In some cases, that's going to be harmful in the longer run. But again, it just depends on the startup and what space they're in.
You mentioned the leasing there in the office buildings. My thing in destigmatization, maybe this work from home is a concept a lot more people are going to come around. Or some of your startups specifically, I know a couple that have transferred to all online, and they're gonna end their lease, no longer have office space. Is that something you're seeing some of your startup companies do to try and cut that burn?
Yeah, I think especially the ones that are in things like WeWorks, other co-working spaces where they're on month-to-month leases or short-term leases anyway, it's easy for them to do that. If they're locked in on a lease right now, it's going to be tough to find a sublease. So they have to do something more negotiated, I think. But we have a couple of startups which are pretty much fully distributed teams already. So they were set up for this well in advance. Others have had to scramble to figure out how to change their daily workflows to make it work. There's all sorts of tools that can be used to do that. So yeah, I think this is going to become a little bit more normal. Even when this passes, there's a risk that this can happen again in some form, right? So I think people are going to have to get set up to do this. And the other thing is business travel. I had a conference yesterday that I would normally have gone down to Indiana for a couple of days, and I sat in my spare room and had a bunch of investor startup one-on-ones. So actually, if everyone's bought into these video chats now, the initial awkwardness I think is gone, and people are going to be more used to doing that. So I think this could definitely change the way things are done.
And Jonathan mentioned risk there. No better time than to talk risk with the CFO. And Schwalbach, Joanna, and Jonathan talked about how companies are making tough decisions right now. But that's something you actually advise for your clients. Why is that?
Well, I think I think the biggest enemy right now is that we see it as paralysis, and waiting, and not really creating the plan, not really saying if this, then I'm going to do that, right? And so what we're just trying to say is, hey, just write it down. Don't just slide down, the course as it continues to slide. Let's just kind of put some plans into action. And so what we're trying to do is look at revenue in a much more granular way for some of our clients to say, how do we know today what's happening? How do we know what tomorrow is what's happening with pipeline, and really getting a little bit more granular so that we can help know when we're, when we're going to make certain cuts or when we're going to take certain actions. So I think we're just seeing a lot of like what I would call agility, just really focusing on agility, really creating a plan so there's not paralysis, and just trying to get a little bit more granular with the numbers than we ever have. And I think, an example of that is, we do a lot of our work for our clients, based on time. So we enter our time and we bill based on time, like a lot of services companies do. And we changed, our methodology of doing that. Instead of saying, get us your time every week, we said, we need your time every day. And because we're going so granular that we need to know if a client has told you to stop working, we want to know about it today, not a week later. So that lag time, we're just trying to decrease that lag time so we can act and be agile. And I think this is going to become the new course. We're probably not going to go back. We're probably going to stay right here, in terms of the future. So I think that's what we're trying to do. I think we've had, just trying to help our clients. I think what Joanna was talking about is being, really being available to the human on the other side of the call. But I think what we're trying to do as well with the numbers is just say, add transparency. So, when you are showing exactly all the elements that are going into your thinking pattern, and you're making your employees feel that they're part of that, how you got to the decisions that you're making, and there's a little bit more buy-in, I think that that brings the team together in a time of crisis, right? We're also doing that with, our clients trying to talk to their customers and knowing what their customers are thinking and trying to work with their customers in a new way as well. So we have a client that's kind of like I'll put it in the exercise gym kind of category. You can imagine not a lot of people are going to gyms. And these guys did an amazing job of communicating with their customers and saying, I know this isn't optimal, but we'd love you to keep your memberships, and we're going to do a bunch of classes online, and we're going to start delivering online. And they've lost very few of their customers, even though they're still paying rent on these gyms and no one's there. And they're certainly they're not making a ton of money and they're losing money, but they're figuring out a way to get through, and just their ability to quickly move, into that suboptimal way of doing their business. I think, and not wasting time in getting there really helped get them, made sure their clients weren't confused and really got them on the other side. I think it's going to help them get to the other side of this storm for sure.
Now, everybody here at the webinar, make sure there's a question box there. We're going to have some questions later on. So please feel free, type in a question, and we'll get to it at the end here. And one of the things that Chris was just talking about with that gym is meeting your customer in a new place, kind of in a new way. Now, Joanna, you've been working specifically with that because a lot of your vendors are trying to create relationships through technology, something very different in today's world, in the history of the business world. How are you coaching your clients to really create those relationships through technology and distance?
Yeah, great question. I mean, I think that agility of already being on the front lines of that technology push has certainly helped my firm, and is something that we're talking a lot with our clients about. So understanding that we, as a distributor of financial products, really believe in the marriage between technology and people. And so we've been on the forefront of pushing that forward, and certainly disruptors in the space. And what that means then is that we're able to then go and teach other people, and essentially people that use our technology software, how to do exactly the same, which in an era, to Jonathan's point, of conferences being canceled and face-to-face meetings being out the door, from a sales perspective, the technology is now paramount, which it had never been before. So there's certainly been a really dramatic shift there. And I think, to Chris's point too, the agility and the ability to switch quickly from one sort of business model to the next, and adapt, is really going to help companies either sink or swim in this environment. And probably will set the pattern going forward of how that business then continues to function coming out of COVID.
What's a key to, I mean, is it as simple as changing the signature of your email? Is it the wording and the delivery of communications? I mean, what's kind of a tangible thing that people could use thinking about building a relationship through technology?
I think it's, in my experience, it's the marriage of tech and human. So making sure that on the human side, you're connecting to the human on the other side of this video conference, right? That's absolutely key. And then from a technology perspective, that's a lot longer of a process. It's making sure that you're really best in breed from the tech side. So I'd say what people can do now is be human on the other side of that. Mm-hmm. And then start thinking forward about ways that you can implement technology to help keep that consistency. So that as you continue to diversify on the personal side, then the technology is there to maintain stickiness.
I'll take the opportunity to segue a little bit into the SBA and the PPP process, because I think what I'm seeing a lot with a lot of our clients that have applied is that some of them had and I see some of these questions coming about vendor versus partner, and it's some of our clients were working with big banks where they entered into the PPP loan process and they were a number, and they couldn't figure out where they were in the process, and they couldn't figure out whether they were going to be successful or not. And so they opened up 3 or 4 more work streams and opened up relationships with new banks to potentially get in. Then there's other people that worked with a relationship banker and had a direct phone number to the person on the other end at their bank. And they said, "Where am I?" And they're like, "Okay, I can see it. I'm looking up your account now, and here's where it is. And it looks good." And, in the people that had that relationship, they were still working with a bank that was using technology, but they had a way to have that personal connection. And their sanity in working with a partner was so much different than working with a vendor. And I think, the question that I saw was one of these things that was asked is, when you're being asked as a vendor to discount prices, and you're trying to say, how do I discount prices in this time where I need every dollar? It's like, the thing I'm talking to my CFOs on is, in a negotiation, you're like, what am I getting on the other side of this? And I think part of what you can ask for on the other side of this is, let me be your partner. Don't let me be your vendor. And what does that mean? What could that look like? Could we say, I'm happy to discount if you can show me that we're going to work together for the next 2 years or 3 years. And then you'd say, I'm securing your business for 3 years instead of you potentially switching vendors next month. Because I'm a vendor, and so this is an opportunity to really build those partnerships and vendors, and like Joanna's talking about, is an opportunity to be agile with the person, bringing the person to the technology and not just being technology forward. And I think that's a very, very important thing that's happening right now with a lot of our clients.
Yeah, I think it's fair to get something for the give. I have one of my portfolio companies was asked for a 50% cut from a bigger, also a tech company, but a bigger tech company that could probably weather this better than they could. And they had to push back on 50% because that was a meaningful hit for them, given where they were at. And they ended up landing at 20%, and they got an extra year of commitment out of it as well. So there's a little bit of a dance. But I think just being empathetic to where everyone else is in sort of the food chain, where everyone's sort of own financial health is important. And if people can absorb a little bit of pain right now, that'll pay off in terms of relationships longer term, I think.
And Jonathan, I want to stick with you real quick, because I think no one needs empathy more than the nonprofits. And you've got, as fantastic as your business accomplishments have been, it's really amazing what you and your group's done in the nonprofit world. How can nonprofits handle this business unusual time with having to use only technology, but also trying to maintain these very fruitful relationships that have a chain of impact in our communities?
Yeah, it's a huge challenge, right? I'd say, on the easy end of the spectrum, they are applying for the PPP loans and the economic impact disaster loans as well. And that's just, a short-term fix that'll buy a certain amount of funding. Nonprofits aren't known for being very big tech adopters generally. Some of them are, some of the more innovative ones are, but there's been a big scramble to adopt technology, I think. And they're facing multiple challenges. If you think about what the average nonprofit does in terms of revenue sources, like often a lot of it comes down to one big annual fundraising gala. And we're in right now fundraising gala season, and it just can't happen. So organizations like One Cause have done a good job putting out some resources on how to host virtual fundraisers, try and create some kind of fun online event or community. And you can still do silent auctions. You can still do a lot of the things which
but no one can see me. No one can see my name. No one can bid against me, right?
Well, look at it. Yeah, you can. Again, if you use the right tools, you can still create that visibility. You'll even know who everyone is because you can see their name on their little box. So there are things that can be done for that. Obviously, individual giving will probably be down as the stock market is down. Corporate giving, people are going to be rethinking. And then long term, if we think about everything that's being thrown at solving this problem right now, the fiscal health of various levels of government and the impact that's going to have on the ones that rely on government funding, it's not good. So they have to really, it's the one thing worse than being a cash burning startup is a nonprofit right now, because your revenue is much more reliant on benevolence. And it's just a tough time. So they have to rationalize as well. And again, this is tough times for everyone. So again, the furloughing is happening, cutting the burn, and that's going to impact the services that are being provided.
And I got kind of a two-part question here for Chris and Joanna. And Joanna, I want to start with you, and it's going to lead into the kind of SBA loan program CARES Act later with you, Chris. But the big question that I've gotten from a lot of my friends who are CEOs, have their own startups: how do I manage retaining or even expanding talent in this time when there's no unknown end here? What should the mindset be, or the culture of a company, if they're trying to retain talent or even grow right now?
Yeah, to be quite candid, I actually had a new hire start in the middle of all of this, join my team, which has been a very interesting cultural shift to try to engage an employee and onboard somebody remotely. It's definitely been a challenge. But I think that the real key point is making sure that person is a cultural fit. So going back to ensuring that your company culture is right. That has been a much easier process because we did our due diligence as a firm to ensure that person was really the absolute right fit for the thing. So I think in some ways, the reality is there's going to be more talent on the street. And so companies that are in the position of hiring certainly have a bit of a nice upper hand in ensuring that you get the right talent for the right place and that it's the right culture fit. And especially in a time like this with working remotely and the difficulty of onboarding, I think that's going to be paramount, is ensuring that culture fit is right.
And Chris, how can CEOs and COOs think about talent while also thinking about some of these challenges with the loan program? We saw last night the news that it's run out of funding now. Hopefully Congress is going to pass another stimulus, but what action steps can CEOs, thinking about their talent, thinking about their customers, what can they do to make sure that they come out of this stronger at the end than where they are right now?
Yeah, I think it's a lot of the similar themes that we've been talking about, in sense of, I think it's it's connecting with your team and, just sharing that. I mean, it's being vulnerable, saying that, what you're working on and being very open about what are your plans and kind of like, and sharing that with the team. I think that the thing that's going to make people retain is when they feel part of something that they actually feel connected to the thing that you want them to be connected to. If they feel disconnected, the ability to hang on to somebody that's not connected goes down. We got our team on a Zoom call last night. We played 2 truths and a lie for an hour amongst each other.
Yeah.
And it was phenomenal. It was one of my employees was an all-star basketball player in New Zealand in 1971. And I didn't know that. And it's really, it was a fun time. So we took a little bit of pressure off the situation. We just got to know one another a little bit in a unique way and had some fun. And I think it's hard to do that in a crisis, but I think that's what we're trying to do. We're trying to do the same with our clients. We're really, I know there's a lot of people that aren't going to be successful with the PPP, but I think there are a lot that are. And we're just saying, how do we kind of, in a sense, share the value of this PPP with our clients in the sense of, hey, we got this money, so now I can weather this storm. I'm going to pass some of it along to you, and I'm going to be transparent in how I'm doing that. And so I talked with a venture capitalist today, and he's like, hey, my portfolio company doesn't have any cash to do this right now. And I said, hey, don't let that stand in the way of doing the right thing and getting this done, and maybe we can figure something out. So let's have the conversation. What needs to be done, and then let's get back to that later. So that is going to be the things that connect with customers, right? And I think not everyone's in the position to totally do that, but if you're not even entertaining the conversation because you think it's impossible, that's the opportunity to be unique right now, because all we have is time. And if you're paying people and you got time and you don't have customers, then go give customers something for free, because guess what? You're just sitting on your hands anyway. So go get something done. And I think that's just a hard concept. But if you're just idle because you don't have business coming in the door, then just go do something. And I think that's gonna show up at some point in the future. It's a little karma there too, right? Business karma.
And Chris, I'm going to put my CEO hat on, I don't know if you see it, but let's say that I didn't get in on the CARES Act and it's now closed. What are some action steps I can take as an owner of a company? What can I do if I didn't make it in to get some of those funds, as many people find themselves?
Yeah, we're seeing so many unique situations, and I think that I've seen some people say we've just got to do a really quick slash, and it's going to be painful and it's going to be hard, but we've got to decide where we think the business is going to, where's bottom a little bit and where can we operate from, and we've got to make a decision to operate from bottom and just work our way back. I had another client a prospective client that we were talking to, and they had a really unique business model in the sense that they could shrink and really do it quite quickly and emerge and get to a really low burn rate really quickly, and then emerge back from it. And so they didn't have a lot of fixed costs. And I think, as you look at companies that have different ratios between fixed and variable cost, it's like if you can just take a lot of your variable costs and get them down and weather that storm, I think that's kind of what we're helping clients do, is really decide where that bottom is. And it's really hard because a lot of people think, well, what if this is 6 weeks away from a really big ramp? Am I going to miss that, right? Am I going to miss the growth back into this? And I think these are the kind of the things you're going to say, well, what's going to be the signal that tells us this is going to really come back fast? What's going to be the signal that this is going to bump along the bottom for a longer period of time? Where are those triggers, and where, how do I lay them out there? So every Monday morning, we're going to look at what those triggers are and say, where do we think we're at? And that's going to guide us for the next 7 days. And your increment of making those big decisions is just getting much more, the windows are getting smaller. So we're doing it on Mondays, and we have one lens on Mondays, and we have another lens on Wednesdays in terms of what we're looking at. But I think those were things we were doing monthly, and now we're doing them weekly.
Excellent.
Yeah. I think as well, the economic disaster loan will get topped up. The PPP loan will get topped up. They've obviously got some stalemate to overcome, but I do believe they'll get there. The $500 billion Main Street lending program hasn't gone operational yet. And so if you were an otherwise creditworthy, EBITDA positive business, there is another source of funding coming there. I think the minimum loan for that's $1 million, and it's for up to $2.5 billion of revenue. So it's going to be a big chunk of the market, and will probably get absorbed by a lot of middle market companies, but that's another option coming as well. And then I think people have got to get really creative. Within startup land, there are still, there's alternative lenders, revenue-based finance, things like that can be done, which in traditional times, VCs would probably, frown upon if they see that on the balance sheet. But, if it's what is needed to stay alive, then go for it. You could get, wealthy individuals investing in your small business. Now's a good time to take all sorts of creative, convertible note, or sell off some of your company, get some of your bigger customers investing in your business, whatever it takes. You got to get really scrappy and creative, I think.
Well, creativity brings us to our questions. We got about 5 minutes, so a couple if you have a question, send it in, and we've got one right here. I'd like all of you to respond. The question is, any ideas of how to cost or improve a cash flow position without cutting the headcount?
Yeah, that's a very magic question, and I think it just gets into, that's when we say we're just understanding, all the business models that you see out there are very different, right? In terms of where those cash positions come from. A lot of people are just kind of like, not manufacturing, or they're just kind of cutting down their inventory builds to kind of get things done. Very scrappy in that sense. They're really changing working capital cycles as best they can in terms of getting cash in sooner, not waiting. All these depend on kind of who you're working with. As a vendor kind of is, trying to push you out to, or 120-day payment terms. It's like, how do you fight that relative to everything else? So it's just, I think it's not just cost, but it's just remember the working capital side of things, and just try to how you're getting cash in the door, and the speed of what you're getting cash in the door versus out the door. And I think that's a big piece of it as well. But there are, I think we talked about leases and stuff like that earlier. Obviously that's a big one for a lot of companies. But a lot of the tech companies we work with, it's payroll. Payroll is number 1, number 2, and number 3 on the list, right? And so it's just a hard thing to narrow out on. We've had some people, I remember at a situation that we worked through a couple years ago, where there was a dip, and we lost a bunch of clients at the same time. And we actually went around and talked to a bunch of our employees and said, who's available to furlough right now? And I know this is kind of an odd time to do that because it's hard, but we had actually people raise their hand and say, I can actually go down to this level for 3 months because of X, Y, and Z. I'm going to go take care of my mom, or I want to, do some other things. And so we actually were able to meet our employees' need just by asking if that was something that they would be open to. And they were, we worked through a very difficult situation by having a very good conversation about people taking, a cut. So that's being, I don't know if that's being creative, but it's again, being vulnerable and asking for what you really need to get through it. And sometimes it works. So.
Yeah, that's really admirable, Chris. I would say if you think about working parents in this environment and how many households in America have 2 working parents, and then you have children at home as well, and then if you were using sort of full-time childcare also, right, without that cost, maybe that certainly lends people with flexibility. So that's exactly the kind of courageous thinking and frank way of managing in this current environment that makes sense. Well done, you.
Jonathan, on cutting costs without cutting headcount?
I mean, obviously, anything non-discretionary has to go. I think travel's a big one right now. These conferences, I think even post this will take a while for people to sort of be back at full capacity. So that's something that can be done. I think working capital is a big one. Just to expand on what Chris was saying, if you can get bigger, healthier customers of yours to pay you sooner, and perhaps even discount for a full year of prepayment or something, just get that cash in, and then delay as much as you can the people further down. You try and play both sides there, but that is one source of one meaningful source of cash. It can be meaningful. Other than that, I think it's all quite fluid, but the tax credits as well. If you went for the PPP loan, there's budget tax credits you're no longer eligible for. But people might want to look into those, and it'll just depend on their own circumstances and their own sort of payroll. But there are various tax credits that don't get talked about as much as the PPP and the economic disaster loans, but they're there. They're reimbursable, dollar for dollar for cash that's going to employees, either for paid sick leave or family leave right now, things like that. Deferment of payroll taxes. So there's other things which are sort of there if you read up on the CARES Act and the Families First Act, I think it's called, that will help incrementally. I think the IRS is changing the reimbursement for net operating loss as well, so there should be a little bit more of a tax refund. There's always you've got to really go down all the way to the bottom line, and look for every nickel and dime.
Yeah, and I'll just add, just because you were talking about all the things that are out there already, Jonathan. I just wanted to add that a lot of times the CARES Act is considered phase 3 of 5 phases of this whole stimulus package, and so we're actually in the middle of it. And there was a lot of discussion about another 2 to 4 trillion coming out in the phase 4, and so a lot of the things we're talking to our clients about too is saying, hey, this is a liquidity package. This is not a stimulus package. This is supposed to get you 3 to 6 3 months or 4 months. But there might be a phase 4 here that's bigger, that kind of that gets you further. And so don't just say, I don't know how I'm going to make it past 3 or 4 months, so I'm going to throw in the towel. And we had a long discussion with one of our retail clients in California. She was just ready to throw in the towel, and we built a plan and showed her some options, and she's sticking with it. And it's a tough situation, but I just that phase 4 might be another boost for some of these companies. So that's why it's important to figure out just how to weather the storm, even if it's for 3 to 4 months. So
a CFO giving hope? I never heard of that, man. I tell you what, you're gonna have some more clients coming up. We got a question here that I like, and I want all 3 of you to answer it. I'll start with you, Joanna. The question is, you said all discretionary spending should be limited. Does that go for individuals as well? There's so many discounts, also on uncertainty. What is the individual and their discretionary, whatever it?
Yeah. So I think that.
So what advice do you have?
So I would say financial wellness is certainly something that I think everybody's looking at when you're if you're invested in the stock market and your own portfolio goes down, if you're 60-20, right, or 60-40, and that 60% of your assets shrinks by a good 30%, that's significant. So financial wellness is certainly something that I would say most Americans are looking at. And insofar as the world we live in right now, I would say if it gives you anxiety, then if you're asking the question, then you should probably address that and face the reality of it. The same sort of advice that we're talking to give to CEOs and heads of firms in terms of being frank and being smart and being earnest with where you're at for the company, the same works for your household. So absolutely. I don't think it's wise to fearmonger, but I also think we're in an era where we're actually talking about how anxious we are and how stressed we are. And so if you're asking the question, then that leads to a pretty frank answer of, yeah, probably you should be thinking about places where you can be more responsible and make astute decisions.
And this is why the recessions are so dangerous, right? So everyone's worried, confidence is gone, so we can track spending, which that creates the recession we're all worried about. But I think given this is such an exogenous shock that just isn't past yet, you've got to just do what it takes to make sure you get through it. And if everyone that if you're unemployed or you're sort of worried about your job security, then you should be definitely eliminating spending, paying down your credit card bills, create that credit capacity, reduce your burn, maximize your own personal runway, because this could go on 18 months for all we know. We just don't know yet. Could go on longer, who knows? But then on the same side of things, if you have tons of job security and you've got tons of money, then actually the best thing you could do right now is, order food from the local restaurant every night to get delivered, and, be buying from small businesses and be spending anyway, because that's your own little contribution towards economic stimulus, better than the $1,200 check that we'll get, hopefully, eventually. Yeah. So I think it just depends on everyone's personal situation, but I think in general people are tightening, and so you don't want to be the one that didn't.
Yeah, I don't know if I have anything to add to that, Ryan. I certainly think there is being quarantined, I think there's a natural burn reduction, just what Joanna was talking about with daycare and school, and our restaurant bill has gone down. So we're just like saying, well, we're parlaying that into ordering from restaurants that can deliver, because that's going to support our community. And by Friday afternoon, my wife is ready to not make another dinner. So it's, and I think what we're also looking at our kids and trying to figure out, we typically don't, want them to stream or watch too much TV. But right now, I think we just bought every single streaming app out there so they can watch whatever they want, whenever they want. And just like, you're going through a tough time, and like a Disney for $5 a month is not going to move the needle right now. So let's just have at it. And so we're finding a few pieces of, special for them in this time, but it's not, financially, it's not a financially big number, but we're doing some things that are just a little bit abnormal to how we normally lead the household. But all the other things I agree with for sure.
Last thing, we got just 1 minute, so just a 10-second answer. What's one mistake you are seeing people make for each of you? What's one mistake you're seeing that people shouldn't make right now?
To me, it's paralysis. It's the slippery slope. I always forget the thing, which is like the sunk cost theory. It's like, oh, well, now we're here, so let's just think about it now. Or now we're here. It's just like, that's just it's a dangerous mind trap. And so I think write it down.
Mine would be assuming that the economy is just going to restart after this. I think it's going to be a very gradual, slow process, and we've got a big hole to dig out of now. And it's going to take a while for confidence to come back.
And mine would be really that insofar as we're talking about being frank and being earnest in the way that you're interacting with your vendors or with your business partners, I've also seen some really bad actors being inauthentic in the way that they're experiencing with people and sort of preying on the negative emotions and things like that. And so I think there's a very artful balance of ensuring the way that you are interacting with your employees or with your vendors or with your contracting agents, that you're being authentic in that and not, preying on fears.
Good.
Well, thank you three for joining us on the Managing Finances and Understanding the Stimulus. And thank you all for joining us on this webinar. Good luck in business in these unusual times. And we will stick around for the next segment.